Jane, I did a fancy log study on the Bloomberg on Chinese yuan, USD CNY. And if you extrapolate it out on this moonshot of weakness, you get to 8 yuan in the summer of next year. Can you go through that exercise? Can you extrapolate out some of these beleaguered EM currencies, and particularly China?
Well, again, the news that you were just referring to, will they pull out of COVID zero or not? Well, that's going to have a big leaning really on the market's expectations for growth in China and therefore on the value of the renminbi, because we all know that Chinese growth this year is really disappointing, and we all know that, of course, a weakened economy means a weakened exchange rate. So those two things are really aligned. But for many of the EM currencies or the economies, I think it really depends whether or not we're talking about commodities exporters, commodities importers, and certainly the ones that have been really struck by the energy crisis are really in some dire straits, or the food price crisis for many EM. Right. And there is some degree of a doom loop for many of these now, and that's going to be really tough to break. And of course, I think we've talked about before, if you can look at the doom loop for emerging markets as their fundamentals keep on driving them lower, and that of course refers to that feedback loop with respect to the dollar too. People keep on holding the dollar instead.
Let's go to first principles off a Fed meeting tomorrow, and folks will have our coverage very dollar-centric. Jane Foley, can central banks manage a dollar turnaround?
Well, I think central banks would like a dollar turnaround. I mean, there has been keeping up with the Joneses to some extent, and that's not just in EM. And we saw the emerging market central banks start hiking interest rates really before G10 in many cases. And of course, you look at the Bank of England, you look at the ECB, next time they go, I mean, the Bank of England obviously this week, but next time they go, they could be hiking into an interest rate hike into a recession. That's not something they want, and they don't really want to be doing 75 basis points, even 50 basis points into a recession. But of course, as long as the Fed does large increments, then because of the impact or the potential impact on their currencies, that really keeps alive the possibility that they may have to go by large increments too, which crushes demand. This isn't just about a doom loop for EM, it's happening here too. It crushes demand even more, which is clearly not what you want when you've got energy prices crushing demand as well. So if the Fed were to ease up, I think it would be a relief to a huge amount of economies around the world.
Okay, so if there is a step down, does that mean that we've seen peak dollar?
Well, not necessarily. And this is the interesting thing, because the dollar is a safe haven, the dollar also reacts to slower world growth. And so, I still come back to the question, until you can really answer, what else are you going to buy if it's not the dollar? Until you can really say, yeah, I really want to go and buy risky assets. I want to go back into EM, or, I'm confident in the euro. Until you can answer those questions, I think the dollar retains a fair amount of strength. And, with respect to the euro, yes, energy prices have come lower in October, and that's great news. But, it won't stop. It hasn't stopped, big chemical companies, aluminium smelters, pulp manufacturers moving out of Europe, because they know that it's not just about the cost of energy this winter, it's next winter and the one after that. Where is that energy going to come from? And I don't think that's something that the euro is really priced for yet.
So how much could we see the dollar continue to rally based on that backdrop, which is really poignant to think about industries moving out wholesale of Europe because they know this is not a one winter problem?
Well, I think we could still have euro dollar going lower, maybe not right in the near term, because the market is getting excited about the story that we've got this warm period and energy prices aren't as expensive as they could have been. But I think if we move into the proper winter over after Christmas into January, February, if it gets cold then, I think the reality of this weak set of data that we've had from Germany in terms of industrial production and manufacturing production, the PMIs, etc., that the warnings about recession, if they come into fruition, I think that's the sort of environment where we could see, euro dollar moving back maybe towards 95 or so.
Jane, final word on sterling. If you'd asked me just a few weeks ago whether this Bank of England would be selling assets, I would have said, I don't think so, but they are. Jane, is that currency positive or negative?
Well, I suppose, that the fact that they managed to pull their credibility back from the abyss, is a positive thing. We'll have to see how this auction is soaked up. But for now, I think the Bank of England, credibility, it's a good thing. But, I think the jury's out. I've still got a negative forecast for sterling. And that's really because, all of the sour fundamentals that existed before that mini budget on September the 23rd are fundamentally still there. In fact, they're worse because confidence has worsened, business confidence, consumer confidence, that sort of thing. We are headed into the recession if we're not already in it. So, yes, in terms of credibility, both the new Prime Minister and the Bank of England, that's certainly a lot more solid than it was just a few weeks ago. But this is a tough set of environments in the UK that both are facing. And I think sterling is still headed for a pretty bumpy ride.